Have you ever felt like our digital world is just, well, a bit much?
Oh, definitely.
So many apps, different ways to pay, and then you throw in all these cryptocurrencies that don't even talk to each other.
Yeah, it's got like a digital Tower of Babel, right? Nobody's speaking the same language.
Exactly. So today, we're taking a deep dive into a project called Quant. You might know it as QNT, and its main tech, Overledger.
That's right. And the idea is that this project, Quant, it wants to be the universal translator for all that digital chaos we were just talking about.
Okay, so what's our mission for this deep dive then?
Well, we really want to unpack how Quant plans to solve this fundamental problem, interoperability.
Interoperability. The
Yeah.
ability for different digital systems to actually talk and transact smoothly.
Precisely. Especially how they plan to do this for the really big players, like banks and governments.
Right.
So we'll look at what Quant actually is, how its overledger tech works, what it could mean for you, maybe your future money.
And crucially, the risks involved, because there are always risks, sometimes murky ones.
Always. Okay, let's get into it.
Okay, let's unpack this. Before we dive right into Quant itself, what exactly is this big problem, this digital fragmentation they're trying to fix?
Yeah.
Why can't everything just connect?
Yeah, it's a really deep-rooted issue, and it basically boils down to that word again,
Yeah.
interoperability. Or, more accurately, the real lack of it.
Okay.
Think about it like this. Every single blockchain, Bitcoin, Ethereum, even those private ones corporations use like R3 Corda, they're essentially like isolated islands, silos.
It's silos, right?
Each one has its own rules, its own coding language, its own way of keeping things secure. They just weren't designed from the ground up to talk to each other. It wasn't the initial goal.
So if a company picks one blockchain and builds something on it, are they just stuck there? Can it not interact with anything outside its little island?
You've nailed a huge problem there. Vendor lock-in. That's exactly what happens. Businesses get kind of committed to one system and then trying to switch later or even just connect to another system. It's incredibly difficult and expensive. I can imagine. Like having an iPhone charger but needing to plug into an Android world.
Kind of like that, yeah. But on a much bigger, more complex scale. This fragmentation also creates massive complexity.
How so?
Well, imagine a big bank wants to use, say, Bitcoin security for one part of a deal, but Ethereum smart contracts for another part, and maybe Ripple's speed for the payment part.
Okay, combining the best bits.
Right, but to do that now, they'd need expert teams for each of those networks. That's super costly and just inefficient.
Wow.
And all this means limited functionality. A single app just can't easily pull the best features from different networks at the same time.
So for big companies, banks, this isn't just annoying, it's a serious barrier.
Exactly. It means higher costs, slower innovation, and it really hinders them from fully adopting blockchain tech. And that inefficiency, well, it eventually trickles down and affects the digital services we all use, and even the broader economy.
Sounds like something even my personal finance app wishes it could fix, just for my own sanity. So, okay, it's clearly a massive headache. Now, here's where it gets really interesting. How does Quant actually plan to fix this mess? What's the big idea with Overledger?
Okay, so Quant's core idea is pretty bold, mainly because it's not another blockchain. That's key.
Not another blockchain. Okay.
Instead, they've built Overledger to be like an operating system for blockchains.
An OS for blockchains.
Yeah, sometimes people call it Layer 2.5. And crucially, it acts as a universal API gateway.
An operating system. That sounds incredibly ambitious. Can you break that down a bit, simplify it?
Absolutely. The best analogy, I think, is TCP/IP for the internet.
Ah, okay, the internet's foundational language.
Exactly. Before TCP/IP came along,
Yeah.
you had all these different computer networks, but they were isolated. Your work network couldn't easily talk to your home one, let alone one across the world.
Right, they were all separate islands, too.
Precisely. TCP/IP gave them a common language, a set of rules that let all these different computers and networks connect. And that's what created the internet we use every day.
Okay, I see the parallel.
Quant wants Overledger to do the same thing, but for digital money and data, allowing it to flow seamlessly, securely across all these different blockchains, whether they're public like Bitcoin or private ones used by companies.
That's a really powerful analogy. But, the internet wasn't built by just one company with secret code. How does Quant's approach, being closed source, fit with that idea of open innovation that built the net?
That's a really sharp question,
Yeah.
and we'll definitely touch on that when we get to the risks. But their stated mission is clear. Become that foundational layer for a whole new digital economy.
Okay.
making that secure movement of value and data possible. And a core part of this is enabling what they call multi-chain applications, or MAPs.
Maps, like dApps, but multi-chain.
Exactly. Decentralized apps that can tap into resources and features from multiple blockchains simultaneously. Imagine an app using Bitcoin for security and Ethereum for smart contracts and another chain for speed, all in one go.
That would unlock a lot of potential.
Huge potential. And just to be crystal clear about who this is for, Quant is laser-focused on big enterprises, financial institutions, governments, central banks. It's B2B business to business and B2G business to government.
So not really aimed at me trading crypto on my phone.
Not directly, no. It's about the plumbing, the infrastructure behind the scenes.
A universal translator for money. It's a powerful vision. But how does this operating system for blockchains actually work? Like, step by step, how does it connect these separate islands without, building physical bridges between them?
That's a great question, because the how is where the real innovation is.
Right.
So Overledger works as this kind of abstract overlayer. Think of it sitting above all the existing blockchains and even traditional IT systems.
Above them.
Yeah, like a layer of abstraction. And the really clever part is that it connects them without needing any changes to those underlying networks.
Wait, really? They don't have to modify Bitcoin or Ethereum code at all?
Not at all. That's why they call it plug and play.
Yeah.
Businesses can essentially plug their existing systems and the blockchains they want to use into Overledger using standard APIs, things their developers already know.
So if Overledger isn't a blockchain itself, does it have its own security, its own consensus?
No, it doesn't. And that's a crucial point. Because it's not a blockchain, it doesn't have its own native consensus mechanism or security layer in the same way.
So where does the security come from?
It relies entirely on the security and the speed of the networks it's connecting to. So if a transaction orchestrated by Overledger involves Bitcoin and Ethereum.
The Bitcoin part is secured by Bitcoin's mining and the Ethereum part by its staking.
Exactly. Bitcoin's proof of work secures the Bitcoin leg. Ethereum's proof of stake secures the Ethereum leg. Overledger is like the conductor of an orchestra. It doesn't play the instruments itself, but it tells the different sections, the different blockchains, when and how to play together to make the music, or in this case the transaction, happen correctly and in order.
That makes sense. And what about its own structure? You said it's like an OS. Does it have different parts?
It does. It has a multi-layered architecture. It's quite complex, actually. Conceptually similar to how network protocols like TCP/IP are layered.
Layers, like an onion?
Sort of.
Yeah.
You've got the transaction layer at the bottom, which is the part that actually communicates directly with the individual blockchains.
Okay.
Then there's a messaging layer above that, which gathers and standardizes the messages or data coming from these different chains.
Right.
Then a filtering and ordering layer. This is really important. It checks the messages against predefined business rules and, crucially, puts them in the correct chronological order, even if they happened on different chains at slightly different times.
That sounds complicated but essential.
It is. And finally, at the top, you have the application layer. That's where those maps we talked about actually run and interact with the layers below.
That sounds incredibly sophisticated. Are there specific inventions or technologies within that structure that really set Quant apart?
Yes, definitely. Beyond just the maps concept, Quant actually holds patents in the US and Japan for its specific method of achieving that chronological ordering of transactions across different blockchains.
Patents? In crypto? That seems unusual.
It is quite unusual for the space, but very common for enterprise software. This patented ordering tech is a major differentiator for them. They also have something called Quant Flow and PayScripting.
PayScript?
Yeah, it's their own platform and language for creating programmable money. Basically, automating complex financial tasks. Think things like payments that only go through if certain conditions are met, or automatically calculating and paying taxes on a transaction.
Automating finance.
Exactly. And just recently, they launched Overledger Fusion, which they describe as a specific Layer 2.5 infrastructure designed to make connecting public and private blockchains even smoother.
Those patents seem like a big deal. How important is that proprietary closed source strategy for them, especially when you compare it to open source projects trying to solve similar problems?
It's absolutely central to their strategy. And you're right to point out the contrast. The core of Overledger is closed source proprietary software protected by those patents.
Which is the opposite of Bitcoin or Ethereum.
Completely. This is a very deliberate corporate decision. It signals their focus on the B2B and B2G markets, where enterprises often feel more comfortable, rightly or wrongly, with a single vendor they can hold accountable, get support from, and who protects their IP.
So, okay, it's powerful, it's innovative under the hood, clearly aimed at big players. What does this all mean for those big businesses Quant is targeting? And then how might that eventually filter down and impact or benefit us regular folks?
Right, let's break down the benefits. For corporations, there are some really clear advantages. First, frictionless integration.
The plug-and-play idea.
Exactly. They can integrate DLT, blockchain tech, into their existing IT systems using those standard APIs we mentioned. Quant even claims it can sometimes be done with just 3 lines of code.
3 lines. Okay, that's a bold claim, but the point is simplifying integration.
Precisely. It avoids the massive cost and risk of ripping out and replacing their old legacy systems. Second big benefit, avoiding vendor lock-in.
Because Overledger connects to many chains.
Yes, they aren't tied to just one blockchain's ecosystem. If a better blockchain comes along for a specific task, they can potentially integrate it via Overledger. It gives them flexibility, future-proofing.
That makes sense.
And then lastly, it really unlocks the potential of DLT for them. They can get the benefits, efficiency, security, transparency without needing to become deep experts in every single blockchain network out there. Overledger handles the complexity.
Okay, so the benefits for big business seem clear. But what about us? How does this infrastructure project potentially touch our lives in the future? What's the connection?
This is where it gets really interesting and potentially very relevant for everyone. Quant is deeply involved in major CBDC initiatives.
Central bank digital currencies, the digital pound, the digital euro.
Exactly. They were actually chosen by the European Central Bank to work on concepts for the digital euro, and they're a key partner in the Bank of England's Project Rosalind, which is all about exploring APIs, the connection points for a potential digital pound.
Wow. So Quant's tech could literally be part of the plumbing for the digital money issued by central banks.
It absolutely could. The money you might use one day to buy coffee or pay taxes could be flowing through systems connected by Overledger.
That's huge.
It is. And beyond CBDCs, think about real-world asset RWA tokenization.
Turning things like stocks, bonds, real estate into digital tokens on a blockchain.
Right. As that trend accelerates, you need a way for these tokenized assets to be managed, traded, and settled across different financial systems, different blockchains. Quant's interoperability is designed precisely for that kind of future.
So they're positioning themselves right at the intersection of traditional finance and the new digital asset world. It sounds like they must be building serious trust at very high levels.
Absolutely. Building that institutional trust seems to be core to their strategy. Look at their strategic partnerships. They're working with giants like Oracle.
Oracle, the database company.
The very same. Overledger is integrated into the Oracle blockchain platform. They're also partnered with SIA, which is now part of Nexi Group, a huge European payments player, UST for banking digital transformation, and LEC Chain for cross-border payments in Latin America.
Okay, those are serious names.
And maybe even more telling is the institutional credibility of the people involved. The founder, Gilbert Verdian, has a background that resonates strongly with institutions. He actually initiated the international standard for blockchain, ISO TC 307, and held senior roles related to security in the UK government, worked with Federal Reserve groups. Their board members aren't typical crypto figures either. They come from places like Rockefeller Capital Management, Comcast, Vocal Inc., the company behind UK payments infrastructure.
That kind of background and network must open a lot of doors in the traditional finance and government worlds. It signals serious legitimacy.
Immense credibility. It's a very different profile compared to many other crypto projects, and it's clearly tailored to appeal to the institutions they're targeting.
Okay, that all sounds incredibly promising for the future of finance, potentially embedding Quant quite deeply. But, every shiny new technology has its potential downsides or challenges. What are the risks? What criticisms do people raise about Quant?
You're absolutely right. It's crucial to look at the other side of the coin. And what's fascinating with Quant is that some of its perceived strengths can also be viewed as significant weaknesses, depending on your perspective. Well, the biggest one goes back to something you touched on earlier. Overledger is a centralized platform. It's run by one company, Quant Network Ltd., and its core technology is proprietary, closed source.
Which, as you said, flies in the face of the whole decentralized idea behind blockchain.
Exactly. For many in the crypto world, that's a fundamental contradiction. It potentially creates a single point of failure. If Quant Network has issues, what happens to the systems relying on Overledger? And it also reintroduces that risk of vendor lock-in just with Quant. instead of a specific blockchain.
That's a really important point. If the goal is to avoid being locked into one blockchain, are you just getting locked into Quant instead?
That's the criticism some level. Another major point, a real weakness many point to, is the lack of transparency.
Lack of transparency. In what way?
Quant provides basically no public metrics. We don't see data on how many transactions are actually flowing through Overledger, how many active corporate clients they truly have paying for licenses, or any kind of total value locked TVL like you see with DeFi protocol.
Seriously, zero public data on usage.
Pretty much zero independently verifiable data. We have to rely almost entirely on their press releases and company announcements to gauge traction.
Wow. That makes it really hard for anyone outside the company to assess how much real-world adoption is actually happening. You're just taking their word for it.
It is frustrating, and for many potential investors or analysts, it's a significant red flag. It hinders independent due diligence.
Okay, that's a big one. What about the QNT token itself? You mentioned it earlier. Any controversies or debates around its actual necessity?
Ah, yes, the QNT token. This is probably the most contentious point surrounding Quant.
Why is that?
So the token is required to pay for the annual licenses to use Overledger. And when clients use it, the QNT gets locked up for 12 months, which restricts supply.
Okay, so there's utility there.
Yes, but here's the twist. Clients often pay Quant Network in regular money, like dollars or euros, fiat currency. And then Quant's treasury takes that fiat and buys the necessary QNT on the open market to cover the license cost. This definitely creates buy pressure and demand for the token.
Right, so the company buying drives demand, but
But the but is crucial. Critics argue that Quant could, theoretically, just change its model. They could decide to operate as a pure software as a service, SaaS business, charging clients directly in fiat and cutting out the QNT token step altogether.
so the token isn't technically essential for the system to function, just for the current business model.
Exactly. The argument is that the token's necessity is tied to a business decision by Quant Network, not a fundamental technical requirement of Overledger itself. And that creates a pretty fundamental risk for anyone holding the QNT token. Its value heavily depends on the company choosing to keep using it in this way.
I see. That's a significant potential risk hanging over the token holders.
It really is. And related to the token, there is also the issue of centralized token holdings,
Meaning the company holds a lot.
a significant amount.
Yeah.
Estimates suggest around 40% of the total QNT supply, that's roughly 2 million tokens, is held by the company and the team.
40%. Wow.
And critically, most of these tokens are reportedly unlocked, with no clear public vesting schedule.
Unlocked, meaning they could sell them at any time.
Potentially, yes.
Yeah.
That creates an overhang of potential for significant selling pressure on the market if the company or team members decide to liquidate large portions of their holdings.
Okay, so centralization risk, transparency issues, questions about token necessity, and large unlocked team holdings. Any other major risks? Competition. Regulation.
Definitely competition. While Quant's overlayer approach is fairly unique, they aren't alone in tackling enterprise interoperability. You have Chainlink expanding its CCIP protocol into this space.
Right, Chainlink's a big player.
Huge. You also have Ripple, which has always had a strong focus on institutional and cross-border payments. And then there are the Layer 0 protocols like Polkadot and Cosmos, which aim for interoperability in a different way by connecting blockchains built within their own ecosystems. So it's getting crowded.
And regulation, always a factor in crypto.
Always. Now, Quant seems proactive here. They engage with regulators, and QNT was actually classified as a utility token by FINMA, the Swiss financial regulator, which is generally seen as positive.
Okay, that's good.
But the global regulatory landscape for digital assets is still constantly shifting, especially in major jurisdictions like the US and EU. So regulatory uncertainty remains a background risk for any project in this space, including Quant.
Wow, okay, that's certainly a lot to weigh up the potential versus these quite significant risks and criticisms. If you had to boil it all down, condense Quant into just one or two key sentences, what's the ultimate takeaway here?
Okay, boiling it down, I'd say Quant, through its Overledger OS, offers this really unique patented technology aimed squarely at solving blockchain interoperability for big institutions. It's positioning itself to be a foundational layer for future digital finance.
But
But, and it's a big but, this comes with major caveats. It's a centralized closed-source system run by a single company. It suffers from a significant lack of public transparency regarding its actual adoption and metrics. And there are fundamental questions around the long-term necessity of its QNT token.
a powerful solution, but one that challenges the core crypto ethos and carries notable risks.
It sums it up well.
So connecting this all back, what does this really mean for you listening right now?
Well, here's a thought to chew on. If Quant does succeed, if it manages to become that TCP/IP of money, by seamlessly connecting all these digital financial systems using its patented closed-source tech, how much of our future financial lives might end up quietly running on a centralized private infrastructure?
Hmm.
And what are the long-term implications of that for the original decentralized vision that blockchain technology first promised us? It's a big question about the future direction of finance.
That really leaves us with so much to consider about where finance is heading. This is a great point to quickly pause and remind our listeners of something.
That's right. If you're enjoying how we break down these complex projects into simple pieces and want more reviews just like this, make sure you subscribe to our channel, CryptoBox. We do all the complex research so you don't have to.